welcome to this Market Outlooks this Tuesday, the 24th of March. And wow, this continued bearish sentiment, fear in the market, printing of money, quantitative easing, panic, I guess, in some parts of the world. It's escalated rather quickly. It's only March. Here in Australia, 1 month, and the numbers of cases now are over 1,000. We're getting stricter and stricter rules. Non-essential services have been shut down, and that seems to be the common thread throughout the world. Different countries slowly restricting the activities that you can do outside of your house. Anyway, with all that said, I want to start here with a euro-dollar trade that I executed last Monday here on the 16th of March. And this is a CBO strategy. You can see here where my cursor is break and retest of the 4-hour 50 and the Fibonacci level. I entered on a rejection on this breakdown of the 5-minute and a close. A tad lower than I would have liked, but I just wanted to wait for a bit more. And with a 90 pip stop, I discussed this in last week's outlook. And yeah, it's running really nicely. You can see this big bearish breakdown so far, and it's stalled here. But I'm continuing to hold it. I'm currently bulletproofed. We'll look to later in the day. Potentially, I'll move my stop from my entry down to around here at 1.102 area. Lock in at least 1.5%, 2%. So this is a really long-term trade. If we look here on the higher time frames, monthly chart, you can see earlier in the month price came up here and aggressively rejected this 50 EMA monthly 50, and potentially could have confused people there looking for this higher low to continue to the upside. However, if you look at the global macro, people in the equity markets are selling out of their positions. And what are they selling to? They're selling to cash, US dollars, from US equities to US dollars, because they want to be liquid. They want to be liquid in times of turmoil to give them options. And some of them may not even have options. They're just saving losses from other positions that they're in to the long side, selling them, and therefore going into dollars. So technically and fundamentally, I really like euro dollar for a long-term move. And you can see here my overall long-term target is as low as 87. So if we close out like this month, that's very aggressive bearish candle, then my first target is around 1.05. And then once it breaks here, there's no real good support level, anything really strong until 87. So I'm playing this day by day, and it's running currently at around about 4%, around there. At the bottom here, it was running at its lowest, almost 6%. So by the time it pulls back to this 4-hour 50, might only have 2.5%, 3%. But like, we're currently in a period of time that potentially is once in a generation. Like, nothing like this has ever happened in my lifetime. So that's all part of my thinking here. The demand for dollars, dollar against all currencies, is relatively very strong, except for the Swiss franc and the Japanese yen, because they're two currencies that also can be seen as safe haven. People sell into to hold. because they hold their value relative to that of other currencies. But the demand for dollars, as it's the US, as it's the world reserve currency, and people selling out of their positions to be liquid. So you combine those two things, and then when we look here on the DXY, which is the US dollar index, you can see that it broke down here in Feb, and then this month we've had this massive bullish push to the upside, which in a deflationary environment, such as equities, which are selling off, the US dollar will tend to gain in strength. And you can see that back here in 2008-9. See, we had this bullish push to the upside, and it stayed around there in 09, came back down and pushed back again. But during the recession period and when that was announced, the dollar gained strength. And if we have a look at the 2000s, let's see. Yeah, 2000s, 1998, 2000. Here, once again, we had bullish strength. We had dollar strength. People liquidating their positions and holding US dollars. So a demand for dollars, people buying, therefore more buyers increase the value, right? Drive the dollar strength up. And sellers, right, when people are selling, price will fall. So if we look here at the stock market, the S&P, right, you can see here this month, here on the weekly chart, you can see for the last, ever since 24th of Feb, we've had 1 week bearish, second week rejection, third, fourth, and this is the 5th week. So my thoughts currently are, we've had this 30% drop, we're in need of a pullback. Pullback, which would be a wave 4 on the daily, a wave 4 pullback. So anywhere from around this 20 EMA region would be a decent pullback, and then I'd be expecting the stock market to continue bearish. And you can see here on a monthly, it's my first target here at around 203, and this 0.618 fib, 171, and then my overall drop target as what I'm looking at as far as it may fall would be around here. So let me try and piece this together. So dollar strength, you can see that shown here on the dollar index, right? So if this is in need of a pullback, dollar weakness. So dollar weakness, if people sell their dollars, because this is going to become deflationary, it's going to start to weaken off. They want to put their dollars into something that's going to go up in value, right? So what's going to go up in value? Something that's undervalued, you could say. And right now, the stock market has had this 30% off, basically. You think you go to the shop, 30% off, that's a good deal. So people selling their dollars to buy back in the stock market to look at increasing the value of their assets. So you're buying there, pull back up to the daily 20 would be around 20%. So that all aligns. So based on that theory and the fact that you can look back on the charts and see that when we've had a sell-off in the stock market, dollar strength has increased, right? And when we've had a buy, a bid in the stock market, dollar strength has weakened, right? Let's look at this, for example. 2nd of January 17 down to February 18. Look at the stock market, the same period, 17 to 18, where are we? 17, not so much there, a little bit there. It came up here and then a little bit again. But more so, especially in this period here in 2007-8 and back in the 2000, the tech bubble. So with that in mind, I'm currently looking at a couple of ETFs that I see as very undervalued as potential buys, spot buys, not trades. So this one here is a pharmaceutical and medical ETF, which is a 300%, so it magnifies it times 3. And if we look here on ETFDB, this is the stock here, right? Pharmaceutical and medical bull, 3 times shares, and you can see the top 15 holdings. So that's what that ETF consists of in terms of the holdings that it has. So we can see Illy, Lilly, Allergen, Johnson Johnson, etc. So potentially looking at a spot buy around here and look for that to pull back up here, and then I'll look to sell it. So that'll be a nice little increase around 100%. And if you also factor in this this COVID-19 virus outbreak, there could be a demand in the pharmaceutical medical sector as more patients get sick, more patients go to hospital. When more patients go to hospital, there's more people that need and demand pharmaceutical and medical equipment, right? Hospitals need to buy stuff, need to acquire more. So that also aligns with a potential pullback. Second one we have here is defensive sector, which consists of, we'll put it in here, this is aerospace and defense, bull 3 times shares. If you look at the holdings, United Technologies, Boeing, which the US Federal Reserve is most probably will bail out, so fund them basically from going under. Lockheed Martin, Northrop Grumman. So there's a lot of really good companies within that ETF there. And you can see here that it's at very good value. So this is at a massive drop. Like, you measure this is nearly 90% off. That's why I love it. Like, there's very little downside and massive upside. And depending at your time horizons, this is a great buy for long term, right? However, when you look at it from a technical basis, there's no bullish price action yet. You can just see we've had this bearish move. There's no double bottoms, there's no higher low. So I'd be just looking for a spot buy and a sell around a pullback. And I'd be looking to continue for the price to continue down, and then looking for that double bottom higher low to confirm that yes, the bearish trend is coming to an end, and I'd look to move the profits that I'd take up here and buy back in down there. So you can apply the same analysis and same basically theory to spot buys in ETFs, that you would when you look at a structure of price action, the whole higher high, higher low thing, right? So when you use the two in combination with the overall value, what the trend's doing, plus fundamentals and what's happening in the world, macro and all that, you can buy them all together. In my mind, this is a really good buy, and so is the one we looked earlier in pharmaceuticals. The last one I want to touch on today is in fintech. Now, fintech is a relatively new asset class. You see this ETF only opened on September 2016 rather. And this has dropped to some nice value, and is also something I'm looking at buying for long term. Once again, buy here, look to sell around this pullback, and then I'll look to then buy in those profits, buy in after I saw a double bottom or higher low to continue this bearish push, long-term 5-10 years sort of thing. And fintech is a very, very interesting space. Basically, the old legacy system or the current system, which is Swift, is a messaging system, messaging framework that was developed in the 1970s that throughout the world is used for transactions to account and all that. Banks, financial institutions all together use the SWIFT system. And the SWIFT system is controlled by the United States. And if the United States, when they sanction a country, one way they sanction them is they don't allow them to use it. Because everyone else in the globe is using the SWIFT system, if you don't have access to it, you're stuffed. You can't trade with anyone. So what do? They find alternate means, like in China, right? It's well known in China that in the past, when the United States have had sanctions on them, on what they can and can't buy, they print their yuan, and then with the yuan buy Bitcoin, sell Bitcoin back into US dollars, and then they have US dollars to bypass the sanctions. Read up about it for yourself, but it's well known, and I guess it makes sense that China controls the majority of mining pools in surrounding the blocks and Bitcoin in general. Could that be part of it? Potentially. So this is another one I'm looking at buying in, and it looks to be at great value in my mind. So something I didn't talk about is euro dollar. I touch on my long-term position, which I'm looking to hold as low as 87. But in the meantime, I took this quick breakout here. Ignore this. This is not a strategy most of you guys that may be watching this know of. But this is an advanced breakout here. And price was stalling at this daily support. You can see this overextended bearish run on a 4-hour chart. Price came here, you can better see it on a 1-hour chart. Made this bottom, pushed up, came down, second rejection, came up, third rejection, and then squeezed to the upside out of this descending triangle. Support 106.55, and you can see these little tweezer bottoms. Didn't quite reject that support, but then when I saw this push to the upside with a massive bullish candlestick, excuse me, I didn't enter there. I entered before. I entered on the first bullish push and closed on the 5-minute, and price came back down, and then 5 minutes before New York opened, it just went bang. And this is running really nicely now. So targeting the 4-hour 50, around 2.7%. And I guess it's a hedge against my long-term bearish trade because, see, if I was running 6% here, by the time it pulls up here, it would have dropped, say, 3%. Well, there's almost the 3%, right? So I make up the amount I've lost by not exiting there. And then what I expect is a further rejection and then to continue with the bearish trend. You can see better on the higher time frames. And now look, I didn't take this as a hedge. I just like the setup, and I like the overall longer term look of euro weakness against dollar strength. As the dollar, I don't see the equity market as finished yet. I think further sell-offs are inevitable because this virus is just starting as numbers grow and more countries shut down. We haven't had earnings from Q1 yet, which will come out in May. And there will be a lot of poor numbers there as people are sent home and not working. manufacturing shut down and all that. So I'd expect dollar strength to increase, but for the short term, this is just a pullback, which is running quite nicely. So that's about it for today, guys. Crypto, as you'd expect, against all the dollar pairs, is having a bit of a bid. Same thing, just potential pullbacks now. So yeah, that's about it. So just a quick overview. Looking for dollar weakness, which aligns with the DXY pullbacks. With dollar weakness comes equity pullbacks. So we've had bearishness. Now want to see bullish pullbacks. And what else? Pharmaceutical and medical spot buys as they're at great value, as well as defense and aerospace and fintech. And lastly, I just want to touch on volatility index. When volatility index is high, there's a sell-off in the stock market, and when volatility lowers, there's a rally, and that also correlates. If you compare the two, when stocks go down, volatility goes up, and volatility goes down, stocks go up. And you can see here volatility has been quite high, almost to the heights at 08. And I took a spot buy on this on ETF UVXY, which tracks volatility. And I touched on this earlier. Unfortunately, I didn't buy down here at this double bottom, but I'm still holding this, and I've just put in a market sell as I see this to coincide with a bullish pullback on equities to come down and have its own pullback. And then I'd be looking to potentially buy around the retest here, and then the equities continue their bearish trends. So anyway, guys, that's about it from me. It's interesting, and I love it when you piece all the picture together, and when you look at it that way, it really gives you a good idea of what to be in and when not to be in what. And yeah, so I hope you enjoyed that. Take care and look after yourselves. Till next time, that's all from me. Over and out, guys. See ya.